I have three stellar members of Corporate India. We'll also be joined by India's largest banker and one of the best consultants. They're stuck in Mumbai traffic, so please do excuse them, and we'll get them on the stage when they come in. But the topic really in 2023, a year that many of you, and I'll start with you, Mr. Narayan, when COVID happened and then we started coming out of COVID and then Ukraine happened, did you have any idea of what 2023 would look like, at least from a corporate balance sheet perspective? And has it played out to script in the 4 months of the calendar year so far?
Thank you, Siddharth. If I were able to predict the future, I should have been God.
Or maybe an astrologer.
Or even an astrologer gets things wrong. But clearly, I think the kind of changes that have been upon us post-COVID, in terms of leadership, in terms of people, in terms of planning, process, have all been pretty dramatic. And I think one of the things that it has taught us, and I think the wisdom of leadership tells you that everyone is mortal, however immortal you may think you are. And your best made plans of men can be thrown apart in just a matter of days, weeks, or minutes. And I think that's something, that humbling fact, that better get to plan for the short term and get it right, rather than 5-year plans, 10-year plans, 20-year plans, 50-year plans. They're too far into the horizon, as far as certainly corporates, and I put myself into a humble corporate there, is concerned. And that's really the biggest lesson. And also that I think going through the maelstrom of COVID and beyond, it has taught us that in leadership at any level, compassion trumps competence.
Compassion trumps competence. That's a good point. And from what Mr. Piramal had told us, there will be questions for consultants, at least from what Suresh said. But I'm coming to you, TV. We were last at Davos, and a lot of the China-related questions were asked. But I want to stick to the script and pose the following question to you. There was pre-2008, if I can take the liberty of describing India Inc.'s behavior, it was growth at all costs. And then we saw the house of debt come apart. And the last few years, I think a lot of companies are still finding their way around. What is the mantra of corporate India? Is it growth at reasonable cost today? Or do you think we are back in boom times?
So I think, obviously there's an India story and there's a global story, right? If you look at 2008, it was more driven by what was happening in China. China had a fantastic decade of growth, and the world was riding onto that. And the banking system in the US had also gone through whatever they did, right? So you had a different scenario. Then you had a China slowdown. I think now, obviously, the agenda to some extent is being set by India, clearly. But I think it's also very important to watch what's happening in China, because you can't ignore China. And if China grows at 5-6% or 5%, that's like India growing at 20%. So to that extent, it has a huge impact, right? So to me, the India story is strong, but we cannot ignore the fact that the world is slowing down a bit. There's still a fair amount of concern, whether it's the US, whether it's Europe. Inflation seems to be under control, but there's obviously only that much countries can spend. Soon after COVID, a lot of countries were spending a lot of money, but now they are a bit more circumspect about it. So I do see growth to be a bit more of a challenge now, but I think the India story is strong. So if you are a company which is impacted only by the economic situation in India, then you're in a good position. If you're linked to what's happening globally, and most companies are, then you would be a bit more circumspect.
Well, you could take a look at the BSE 500 and figure out that most companies are linked to what is happening globally. And viewers and the audience here, take note of the fact that China and the US are constants when it comes to India's economy. And if you focus only on the stock market, then definitely what happens in terms of the US, a flood of liquidity or it being bought back. Coming to you, Mr. Reddy, the mention of China and the health crisis that it sent all across the world, and the lessons that we learned today. And I'm taking Suresh's point forward about compassion. Do you think we are better placed as a country when it comes to our overall healthcare infrastructure, or have the immediate lessons of COVID been forgotten a bit?
No, I think we definitely have not forgotten the lessons of COVID, in the sense that healthcare became the center of the economy. It impacted both the economy and the health of a nation. So I think it continues to happen, and if you see what's happening in the listed space and in the healthcare space, there's a lot of PE money flowing in for acquisitions. What I would like to see, however, is more investment, capex, into new hospital bed creation. And there is a demand supply gap, which I believe a lesson from COVID is that private sector has to be incentivized to work with the government or independently to add additional beds and therefore more capex into healthcare.
I used to imagine, and that's a very interesting observation that you made, that I live in the NCR, in fact in Delhi and all around me in the NCR, we see a lot of private sector investments in the health, in hospitals happening. There's of course also the expansion by the central government when it comes from the All India Institute perspective. But did I understand you right that you feel that the private sector investments in this space are not happening enough? Did I get that right?
I said it's not happening to create new bed capacity.
Okay.
There's been a lot of let me say acquisitions happening rather than the creation of new bed capacity, which is what the country needs.
Top of it right now, can you recall or tell us a number of beds that India needs across all levels
100,000 for the next 10 years.
Sorry,
100,000 for the next 10 years.
100,000 for the
Yes.
next 10 years. And how short are we of that?
We have 1 bed per 1,000 people. We should make it 4 beds per 1,000. So we're at 25% of what we need to do.
So these are sobering numbers, because we sometimes get lost in the euphoria that the markets generate and corporate balance sheets and oversized earnings, and this is reality. In one of the previous sessions, we realized that even in plywood manufacturing, how behind China we were, and sort of not to feel jealous, but it's an aspirational thing. TV, coming to you, in terms of the shifts and disruptions that you yourself have managed to capitalize on, if you could just share with our audience and to sort of go beyond just dry numbers, in the last 2 years, how have you as a corporate leader managed to take your company and the business to grab those opportunities?
You know, I think we were very clear that India is where the opportunity is. India is where we've been for more than 100 years. But 10, 15 years back, when we wanted to build scale, there were few opportunities in India, because there were very few inorganic growth opportunities in India. And organic growth took time, because to build a steel plant, you need to acquire 3,000 acres of land, and it took us 10 years to start a new site. Right? So in that context, IBC was a great opportunity for us. And we were the first company to move and acquire. We acquired Bhushan Steel. We also saw other opportunities. We had 2 other acquisitions. We had the Usha Martin steel business, and then we did the Nilachal acquisition, which was again a privatization of a government company. Very different, but I think there were opportunities that came our way. Yes, we added debt to our balance sheet, but I think we got the timing right. We could pay down a lot of that debt over the last 2-3 years when things turned better. So I think we are in a better position today. I think we have more sites, which is to me the bottleneck in India when you want to grow. If you have to start a new site, it takes a long time. So I think over the last few years, we've capitalized on inorganic growth opportunities. Now we have enough in our existing sites to really leverage it and grow organically to double the size that we are today. So I think we are well placed for that.
Was the NCLT acquisition easier versus the post-acquisition sort of integration?
No, I think since we were the first, there were a lot of learnings, and we had to engage a lot with the Ministry of Corporate Affairs, because, for instance, when you acquire these companies, what happens to the old taxes that the government was claiming from the then promoters, things like that. So a lot of things needed to get clarified. We went through that. So I think that was probably more challenging. Getting the most out of the asset, I think we've been in the steel business long enough to do that. Integrating, yes, has its own challenges because different cultures, so getting that together. But we, I think, did reasonably well. And now what was then Bhushan Steel is part of Tata Steel. It's not even a separate entity. It's one of the sites of Tata Steel. So I think we've had a good story there.
That's a good point. Mr. Nai, I'm reminded of the time when Maggi noodles were in a soup. And you spent a lot of time trying to extricate the company out of that soup. What lessons did you learn then which are still relevant today in today's business environment?
I think that's a very good question. And probably the first thing that we learned was that perception is reality. That you might have a reality that you think is the truth, but unless you speak and talk about it, engage about it, and in all humility and modesty, go about convincing people on where you stand, you make a big mistake. So I think that was one. Secondly, that like human beings are not immortal, corporates can never take themselves to be immortal. You can have a near-death experience, and you have to do something about it. In the peak of good health, you can have a heart attack, and that's exactly what happened to us. In the peak of good health, we had our heart attack, and we realized that to be connected, to innovate, to empower, to enable, and to get the leadership at the right level to take the right actions is the secret of good performance.
What stents did you put in the business?
Interesting. I think the first thing that I focused on, I'm very much a strong believer in the fact that culture eats strategy for breakfast. I always believe in that. So while I can be hard-nosed about numbers, I honestly believe that the culture of an organization is key. Look at all the leadership failures around you. It has to do with culture, seldom to do with strategy. So we worked a lot on the culture of the company. How do you get people to act? How do you get people to make failures and yet not be castigated for it? Now these all look simple, but to institutionalize it takes time. How do you innovate and try out new things? How do you allow leadership and youth to take the seat at the table? And finally, how do you keep your balance between growth, profitability, and the interests of all your stakeholders at all points in time?
A quick one before I go to Sunita, and this is, if there was one thing that you could change in that entire noodle saga, what would that be?
I wish we had reacted earlier.
Okay, so lessons for corporate India from the man himself. So I'm coming to the point, and I'm not pushing the Maggie agenda here at all. The disease burden that this country faces, the pollution, what has happened to our groundwater, the pesticides in the food chain, you see the final manifestation on it in the hospital beds that you run. Every year you make presentations to the government at the state and the center level. But with all seriousness, do you think we are moving forward in dealing with that, or are we stuck at the same point in time?
I believe we're moving forward, and we're moving forward in terms of technology, in terms of hiring, attracting new talent into the industry. And we're moving forward, like I said, technology in terms of digital. So we're able to deliver healthcare at the last mile. But that is not enough. I think there's so much more, because even without considering the environment, the disease burden in India is so high that by 2030 we would probably have to spend $1 trillion just for the NCDs, which are non-communicable diseases.
$1 trillion.
Yes. If you think of, like you said, heart attack. When you made that statement, I said, is that destiny is that karma a science? When if you were to get a heart attack at 30, really you wonder. But we really have, there is an opportunity to do so much. There's oncology, there's cancer, there's orthopedics, there's cardiology and strokes. So these are the major killers that is even affecting young India. That is because we have a predisposition towards these diseases.
Since we are talking about the disease burden, I also want you to share your thoughts on the cost burden. There is a privileged set who is able to access the best healthcare in India, corporate healthcare, and pay corporate rates for it. But there's a vast majority, and I would implore this entire audience to do a mental count of how many people that they support, even in an extended fashion, have access to any form of good health insurance. And you, as one of the foremost healthcare providers in this country, what would you say about the cost burden? A scenario where the service tax on a health insurance policy is the same as the service tax that one would pay on a quasi-sin good. I find that that is a terrible situation. What do you have to say on that?
Truly, but I think the first thing we have to realize is that healthcare players in India are delivering healthcare at 1/10 the international cost, which is why we get patients from all over the world. Unfortunately for India, insurance is not as widespread as it should be. In foreign
Isn't
countries.
cost, sorry to interrupt you, isn't cost of insurance an issue?
No, I think it's also the priority. I mean, did you not get a car insurance before you thought of a health insurance? So the priority, the mindset of making health insurance mandatory, and if you have a larger population base, you know the equation about risk and the ability to cover risk, so therefore your premiums will be lower. I think this whole insurance question we should think of differently. We have also asked the government to lower GST on health insurance and tax exemption for higher premiums, which I truly hope they do so. The second thing that would be important is that as employers, if we made it mandatory to cover all of the, even in mid-sized companies, SMEs, we made it mandatory for all our workers to have some sort of health insurance. I think that will give them access. Then it's the responsibility of the healthcare providers and the government to really create the infrastructure and the beds.
Okay. A lot of time, TV, I'm coming to you again, and let's talk about the cost of natural resources and the difficulty in tapping into them. Again, not to go into the past, has that changed for you for the sector that you operate in specifically?
No, I think if you look at India, we are actually lucky to be geologically very rich. But we have only leveraged a fraction of it because the process, the costs, the regulatory environment, everything is still evolving. 2013 you had a MMDR Act which is on mining, which has made it a bit more open and transparent. But otherwise, if you look at a country like Australia, Australia is very rich geologically, but look at how they've leveraged that. And I think India has an opportunity to do that. Having said that, I think one of the challenges we'll face over the next 2-3 decades is this whole transition. So what's happening as a consequence of transition is there's an underinvestment in fossil fuels. But that doesn't mean the demand is not growing, because a lot of India is still developing. Africa, with more than 1 billion people, is yet to progress in that sense. So there's going to be a demand, there's going to be underinvestment in some of the fossil fuels. There will be inflationary pressures because of that. So I think we have to really look at some of these areas and understand the cost and complexity and the consequences of this. Even if you look at something like copper, which is required if you want to electrify the world, it's taking longer and longer to get mining permissions across the world because of environment concerns. But you need some of these minerals to solve the problems that you're trying to solve. Right? So this is going to be a challenge going.
Quick interjection there. In a different context, people have said to me in the past that India sort of leapfrogged from 2G, 2.5G straight away to 4G because the 3G rollout didn't happen. In terms of Indian industry going green and use green in any manner, whatever specific to your sector, do you think there is a similar play possible that we suddenly move and become like world leaders in terms of green manufacturing, green steel, whatever you have it?
No, I think the advantage India has is we are still creating new capacities. Those capacities can be greener than, let's say, somebody else. Let's say China, when they created capacities 10 years back or 15 years back. So the rest of the world is trying to substitute capacity which is not green with capacity which is green, whereas we can create green capacity. But having said that, industrial processes have lived off fossil fuels for more than 100 years. So the supply chains, shipping, ports, everything is fixed around fossil fuels. So you can see coal and oil move more easily. Even gas doesn't move so easily. So to assume that electricity will move easily across the world or even across a country is actually being a bit simplistic.
How much of your steel would be classified as green steel?
Firstly, there's no definition of what is green steel.
Okay.
Okay, so that's a starting point. So we are saying let's define what is green steel. I mean, everyone likes to call their steel green, but there's no standard or definition of what is green steel. So that's a starting point. Some of these need to be specified. I think in Europe we are ahead of everywhere else because the regulatory environment encourages that. I think in India the regulatory environment is still evolving on this.
Okay. Suresh, I'm coming to you again. And this time, we do Mood of the Nation on India Today regularly. And one of the largest sort of political polling firepower that any media house has in India is the India Today group. But what I want to do from a Business Today platform is the mood and the taste of the Indian consumer. As someone who serves, God knows, hundreds of millions of billions of servings of various kinds every year to Indians, what is the Indian consumer of 2023 according to you in terms of the sectors that you know about?
Look, I think it's a very good question, and this is probably the most exciting time for a food company to be in India. I say this in all seriousness because, we have multi-generational consumption that's happening. We have the older generation, we've got the millennials, and we've got the Gen Zs. And really, I mean, one of the things I find is that some of our brands, I mean, if I take a brand like Maggi, it straddles generations.
I didn't bring up Maggie this time.
I did because I love it, and I think it's because it has defined, in a sense. There was once an anecdote given to me that somebody said that after rice and wheat, Maggi noodles had the highest penetration in this country. Now, that probably was more fictional, but it tells you the kind of taste profiles that's happening. Chocolates are, again, I mean, brands like Kit Kat are really becoming extremely popular. Coffee is catching on. I mean, coffee is the social drink of choice today is coffee. And okay, I have a coffee brand, and there are numerous other coffee brands. But I think that's also becoming important. So the good vector between taste, indulgence, nutrition, value, and lifestyle is redefining the consumption patterns of India, and you saw my results yesterday. They were reflective of that.
Absolutely. Are Indians consuming less sugar? And I know Sunita is going to listen to that.
Yes, they are. Yes, they are. They are becoming. There is a definitely a heightened level of consciousness. Certainly in our kind of target consumers, we see that happening every day. We have also taken steps to do that because it is right. It is good.
Should there be a mandate to reduce sugar consumption?
Look, I think there is reducing sugar by itself is a clear possibility, except that nobody might want to buy your product because it will taste like nothing on earth. So that's one of the challenge is to get technology to do the trick of giving you a reduced sugar product and yet giving you the taste.
Mr. Khara, the chairman of India's largest bank is here. Mr. Khara, welcome. We started on time, but he got stuck in traffic and there were important meetings. I'm very glad that you were able to make it. I was just talking about whether Indians are consuming less sugar. So I'll dive into a question with you straight away. Are Indians taking more home loans, more car loans, or have have they reduced it given what is happening in the economy?
My assessment is that we don't see any uh, slowdown as far as the demand for home loans are concerned. So that I can say for sure, because we have witnessed in the last quarter our home loan sanctions were up by about 29%. So I think that's a very clear reflection that it is actually attributed to a couple of things. One is, of course, the pent-up demand post-COVID, and people realize that it's a time when they should perhaps look at the bigger houses also. I think it's a demand is quite universal across the country, rural, urban, metro, everywhere. So I think it's a very positive sign. It's a very positive sign.
This is the State Bank of India talking about home loan demand and growth there. And please remember the fact that this happens after a very significant and sharp increase in interest rates. The second question, Mr. Khara, चीजें सस्ती हुई हैं कि महंगाई बढ़ती जा रही है?
देखिए, ऐसा है कि चीज़ें सस्ती भी होंगी और महंगी भी होंगी. So now what we have to look at is whether uh, a movement of interest rate in a quarter is a reflection of the trend, or for a year is it a reflection of the trend. Perhaps
But the members of industry sitting on your right, all three have raised prices, unless I'm wrong, in the last 2 years. Please raise your hands if you have actually reduced prices on any of the goods and services that you supply.
no, see, the point is it's eventually a circular economy. Na? If at all prices are going up, the salaries are also going up.
Okay.
So we have to look at it in that context eventually. And well, of course, interest rate is one of the major factor when it comes to the pricing. But equally important is the supply side constraints also. So I think those supply side constraints have got addressed to a greater extent. And apart from that, the way we look at the rural economy, that also is one of the contributing factor for the prices going up or down. So I think there are multiple variables.
Okay, we spoke about retail borrowers, but Mr. Khara, he's on the extreme left today, but on his right are people who are large institutional borrowers. I'm not saying that you are going to borrow, but Mr. Khara, from that perspective, because you deal with pretty much the biggest names in Indian industry, what is the mood right now? We have heard consistently for several quarters now that private sector capex is not kicking in. A lot of the expectation that the government has is not being fulfilled. Is that your assessment as well, sir?
I would say the contrary, because last year, as per the project today, the investment commitment was to the tune of about 20 trillion. It was still financial year 22. Financial year 23, as per project today, the investment commitment are to the tune of about 37 trillion. And when we look at the private sector commitment, up to financial year 22, we had seen it around 50%, and now it is as high as about 65%. So that is a very clear reflection that actually a reflection of the private sector confidence in the economy. And the way I look at it is that eventually it is nothing but the demand on the ground. When the demand on the ground is strong, perhaps interest rate is not a determining factor for people to borrow.
Absolutely. When we started this panel, Mr. Khara, I raised the point of how 2008 and subsequently the house of debt that collapsed in India. Today, if you were asked to describe what is the situation as far as leverage is concerned and debt is concerned for all of corporate India, do you think it's a comfortable situation, or are there any sort of warning signs, signals flashing anywhere?
I think there was a lot of learnings, and the corporates also deleveraged to a greater extent. And or alternative, they borrowed from the markets where the interest rates are zero or around zero. So I think, but overall, when we look at the overall corporate leverage, it has certainly come down. And now I would say that we also look at what is their interest coverage ratio, and they are actually quite comfortably placed as far as the cash flows are concerned. So, the corporate delinquencies are certainly, I think, there is a partly it is attributed to the corporate behavior, more responsible behavior, and apart from that, the deleverage which has happened over the period of time. Um, I would say that we don't envisage any kind of a challenge as far as the corporate delinquencies are concerned.
Okay. TV, we are winding down our conversation, so I'll come to the rest of the panel very quickly. I wanted to bring in Mr. Khara and catch up on the conversation. Today's choice to you in terms of growth, will you prefer borrowing, or would you rather be conservative and use a mix of internal accruals to drive future expansion?
Ideally, if your internal accruals can take care of your expansion, that's the ideal world. But India is growing. So for us, you have to grow to stand on the spot, right? Otherwise, you lose your market share. So, and we are a capital intensive business. So we typically have if you say a net debt to EBITDA should not be more than 2, for instance. In the past, we've gone up to 5 and 6. Then within that, whatever you can supplement your internal accruals with borrowings, you can do that. Then you're still within a band which is safe, can deal with downturns, while at the same time you are participating in the growth opportunities that there are.
People seem to be cautious this year. How's your appetite as far as growth is concerned?
I think we continue to invest. We are investing almost 10,000 crores a year in growing our capacity in India. So that investment goes on. But yes, interest rates are going up. We are watching what's happening across the world. We have a big footprint in Europe. So we are exposed to what happens in Europe as well. So we're watchful in that sense, but we are in a far better place than we were 3-4 years back.
Far better place. Sunita, since you had spoken about the deficit in terms of our healthcare infrastructure, the need to have far more beds, what is your group planning, and how's your growth appetite given the overall current macroeconomic environment?
We believe there's a huge demand for healthcare, and we are currently investing 3,000 crores to add another 2,000 additional beds in the next 2 years. Also, we're pushing asset utilization by reducing the number of days stay in hospitals, and therefore we're getting more headroom for growth. So I think in terms of asset utilization and creating new capacity, there will be huge headroom for future growth.
Okay. The last question on the panel today to you, Suresh. In terms of your company catering to a lot of tastes that the Indian consumer has, you've done a very good job, and the numbers show that. Is there a taste that you plan to cater to which you have not done so far?
Look, one of the things that I think interests us as a company a lot is the health science space. Okay. And we have fairly strong products that we have lined up there. In fact, the latest launch that we have got is a product that is very close to my heart. It's called Thicken Up Clear, which is for Thicken Up Clear.
Okay.
It is a product for people who suffer from dysphagia, that is the inability to swallow.
Okay.
There are a number of and Sunita will know this much better than what I can talk about, number of people who are unable to swallow because of old age, and also people with cancer recoveries who have problems in swallowing food. To me, this business may be small, but it makes a huge social impact. And it is these kind of products that really is the next phase for Nestle. And we have the capability to do it.
Wonderful. I wish you all the best. Mr. Khara, the final question, and I hope you won't give me a set answer because I have asked you this in the past. EMI कम करेंगे sir थोड़ा सा, will interest rates go down, or does the consumer have to continue to bear the burden?
नहीं, कोशिश तो हमारी हमेशा यही होती है कि EMI कम की जाए.
आप रेट नहीं बढ़ाते हैं, अवधि बढ़ा देते हैं, the term goes up.
No. See, the point is what I mentioned. There are multiple variables. So, given the choice, we will certainly like to reduce the EMI, but at times we are constrained by those variables which are beyond our control.
Has the RBI signal turned green versus red?
Yeah, pivot is something. I hope that it's a very positive sign.
Okay, this is not supposed to be a news interview, so I'm going to pause here and thank the entire panel for their time with us and answering all these questions. Thank you very much. And Ayush, Over to you again. Thank you, sir.